Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News Channel by wavestrategy.com. And I'm sure you might be anxious looking at how Nifty behaved in today's session. There is a sudden reversal of around 200 points that you are seeing on the Nifty, and that too after when the markets were on the up move. So that is not very surprising for us because we were anyways expecting this to happen, as in the morning daily research report of equity, I very clearly mentioned unless Nifty crosses above 11,000, 11,100 zone, which is the strong hurdle, we might start seeing a very strong move on the downside. And this is what has happened. Nifty has now broken below the important support levels. It has broken below the previous low, which was formed near the zone of 10,880. It also broke the level of 10,820, which was the gap area. And this is happening very suddenly. For many of it, it's like a shocking move. But for us, it is completely and precisely as expected, because this move on Nifty has happened by after getting various signals on the technical chart. There has been a trend line which I have been showing on the Nifty equity research report in the morning, which we published. There is a trend line. I'll discuss that with you right now. That trend line acted as an amazing resistance over past 5 days, and we were just dragging, and the buying started emerging in the small cap and the mid cap space on all the counters which were not participating. So that's a classical indication of a bull trap which we saw in past 2-3 days of time, and an amazing distribution that has happened on the Nifty at the higher levels. So I think we are, and in each of the fall in the previous occasions have been sharp and fast. If you look at the prior fall which on the Nifty which happened, have been sharp and fast, and suddenly Nifty lost somewhere around 500, 600, 800 points, and you might just be wondering what happened. So again, this time as well, the reversal is sharp and fast. I think any rally is going to be short-lived unless we manage to cross about that 11,000 psychological mark. If you follow me on the monthly research report, which we publish once in a month, in that I have clearly mentioned how Nifty is going to behave, and why 11,000 to 11,100 is the major hurdle that it has to cross for any positivity to emerge. And we are clearly seeing that has not happened. So despite the euphoria, it's not working out. I was just coming across an article yesterday which read from a well-known broking house that Nifty is headed toward 12,400 levels in 2019. Now, these kind of articles comes exactly when the euphoria starts building up, and there might be no strong basis for that to happen, but people start extrapolating looking at the past movement. This is a dangerous scenario. We can clearly see US collapsing. We can clearly see commodity collapsing. This time crude prices have gone down drastically. I do not see as a positivity, because there is a slowdown in the demand globally, which is resulting in the fall of crude oil prices. Many are looking at it. It will help India, fiscal deficit, and all of those things, which we keep hearing. If you are bullish, you will justify the stand in either ways. If you are bullish, you will say lower crude prices are good. If you are bearish, you might say it's a slow demand. So you can justify it either ways, and there is no objectivity. To stay objective, you have to look at charts, and I'll explain you on the chart very clearly why I was bearish as soon as Nifty started dragging and drifting over past 2 days of time. And today I clearly mentioned that you shouldn't be surprised to see sudden reversals happening, and that is what has happened in the market. Let us now see the chart and what it suggested and how it helped to capture the top again. I'm assuming it's a top now right now, and it's not going to be breached for some time. So let us see what has happened. So if you look and remember the previous webinar update, I clearly mentioned the move on the upside is approaching the resistance area. We have reversed back on the previous occasions from the same zone, and again we reversed back from here. Let me draw a trend line which has been working amazingly well, and I have been showing in my daily research report. This trend line is very accurate in capturing the entire move on the price on the market. So if you connect the lows here, and you can clearly see, let me make it a thick line. Okay, you can clearly see this is the line which Nifty has failed to show any kind of attempt of breaking above it. So this is the channel. So this channel I have been showing for quite some time. If you look at it, there has been a multiple attempt on the upside to breach it, but it did not do that, and it has reversed back, forming a classical negative divergence on the ROC. If you look at the ROC indicator at the bottom, There has been a classical negative divergence on the ROC. We clearly saw in the morning research I published about Bank Nifty showing negative divergence on MACD. There has been a double top formation. The trend line is not breached. Fibonacci, if you measure, it has been at the 38.2% Fibonacci ratio from where happening outside. Fibonacci has been not breached. So all of these clearly indicated that there is some warning sign here when the euphoria is started to build up and people started talking about India research reports 12,500 on Nifty. That is sufficient for me to understand what the sentiments now are prevailing in the market and look at the reversal. It has taken out all of the gap up areas in just one day of time, and that is how Nifty has reversed back on the prior occasions. If I am reading the markets correctly, this is the time to use any pullback as a shorting opportunity unless and until we cross 11,000 on the upside. So unless the 11,000 level is crossed on the upside, I don't think we are going to make new highs. We are going anywhere else, and that level is going to remain intact. The sell-off has been on the heavyweights, right from the IT counters to across financial stocks as well. And those stocks were leading on the upside, and they have started now leading on the downside, which is not a very, very promising sign. So if you look at the wave pattern now, the wave pattern clearly suggested that we formed an expanding triangle pattern. There was wave A on the upside, wave B down here. We had wave C, wave D, and now we might have completed wave E of the expanding triangle pattern. Monday is going to be very important. If we continue to crash on Monday, it's clearly suggesting that we are headed for much lower. The targets I'm going to mention in my daily equity research report, financial waves, short-term update. Stay tuned there. I'm going to talk about the targets and what trade setup, because this opportunity you will not get it very often. But once it comes, you need to go all in such kind of an occasions. But yes, you have to use a strict stop loss, and that level is going to be decided based on wave theory, which we use. So use that stop loss. We have also generated intraday Nifty, Bank Nifty short calls that went amazingly well. We generated short calls on stocks. Those worked out, but because of volatility, it becomes tricky at times. And you need to have that leeway for volatility on the markets. So it is time to be cautious. Do not get carried away in the euphoria. Do not buy this dip. I think we might have topped out for good, at least for next few months, and next 2 or 3 days is going to again confirm back whether my reading on the charts have been right or wrong. So I turned bearish when Nifty was near 11,700, 800 levels. I turned bullish back near 10,000. All the way on the upside, I've been bullish towards 11,000 again. And now is the time where I've cautioned in the morning, and I'm cautioning now about the markets can be in a dangerous territory, and it is time to be cautious. Looking at the technical picture, looking at the strong sell-off we saw in commodities, and looking at what US has been doing, I think nothing is going to work unless and until we complete the entire pattern of Elliott wave. So that's it from my side. Get access to this research, morning research that I've been talking. Get access to monthly research that has been fabulous. The pattern shown on the monthly research is fabulous. I myself get thrilled at times how the forecasting pattern and the actual pattern worked out so lockstep manner, and that is what we saw. So look at those reports. You can get it access from the website wavestrategy.com. Get access to the intraday positional advisory. You can where we give a clear call on what to short, what is the stop loss, the targets across equity, commodities, and currency markets. That's it from my side. Stay tuned. It's time to be alert again. Amazing trade setup on the markets. Do not miss out this next big trend. And see you again next time on a Friday at 4. This webinar will be again available on the website wavestrategy.com at 5. For any queries, you can also reach out to us on 99204 22202 or write to us at helpdesk@wavestrategy.com. That's it from my side, and have a wonderful weekend. It's time to be on the toes and keep looking at the markets. Next week is going to be highly volatile, and stay tuned. Thank you.